Hey traders, Nick Sheen here looking at Goldman Sachs, but more so they reported earnings this morning before the open. This is more a look on managing a trade or deciding on how to act, if to act on a stock given levels that I know. So this eliminates the human nature of reacting to ticks. So if you see, you've heard FOMO, the fear of missing out. Well, if you see big red ticks like this, you tend to want to chase it. You, not personally, but every human. I tend to want to chase it. It's like, what am I missing out? I don't want to be off the boat. Let me get on. And this is where mistakes happen if I don't do it knowing levels. Same on the downside. These happens like, oh my gosh, I need to get off and sell sells. So this is a visual representation of how I can get a little bit smarter and not to chase something. So back here, which is early March, I noted a tightening of the range. So this is Goldman Sachs daily. So every candle is 1 day. I said, okay, the range has been all this and then all that, and even then it's coming to a point, kind of like came to a point here. So I said two scenarios. One, it loses the footing, or two, it bounces higher. And if it does bounce higher at the point in time on whatever, the 8th, maybe the 7th of March, I drew this line, and I said it could be, if it unfolds upwards, this is the path I think it will take. Indeed, it broke out and chopped into my potential. And this morning, Friday, all banks rallied on earnings from Friday and from last week. And this morning, it spiked to that level and then failed. So, am I a genius for picking this, or did I pick it randomly? So it's no to both these. I merely looked at the fact how it behaved last time it got to here. So this upside potential was purely technical from this squeeze, and then it made sense for me to put it right there because of what happened in the past. So let me mark it up a little bit. So we're going to bring a scratch pad here, courtesy of Microsoft and Windows. So the reason why I put it here and I stopped it, even though why not here? Why not here? Because I looked left to see how the stock behaved, and I saw that this was a zone of importance. On the way down, they tried to hold it and then they fell apart from it as this zone. So this is where I said, logically, if this unfolds upwards, this is where they're going to battle it over again. Same reason I said, if they fall, they're going to battle it over somewhere on here because of this is the Christmas correction, and they overshot. So somewhere above that will be a good floor. And so it's stopping right here is not a coincidence, because if I look left, this is exactly where I thought it would stop on the way up. That doesn't mean that it can never go higher. It just means that once it gets there, it's going to be a fight. Whoever fought over it here is likely going to fight over it again. So bulls and bears, this is an important pivotal point for bulls and bears, so they will fight it out, and whoever wins will overshoot in that direction. So today's candles are not pretty for Goldman Sachs, just for the fact that it reinforces those that say, oh, it's a double top. It's just mere, almost to the penny that this is exactly where they failed, and this is where they failed before in a big way. So the bears are kind of like, puffing their chest saying, hey, we can do it again. The bulls are saying, no, man, I can do it. So the outcome remains to be seen. We still have more banks to report. Think Morgan Stanley, Bank of America tomorrow. So it all depends. They're going to move in sympathy, but it doesn't look good for banks just because they're not that exciting as a group. From a meme perspective, everybody believes, whether reality or not, that they cannot hold their greens, but everybody also believes that they're pretty cheap and that could be a value trap. So who knows what's going to happen from here. This is not an obvious point of entry for Goldman Sachs, and it's not an obvious place to short it. So for me, there's no trade. But today's point is more of a lesson. And this, by the way, works at any time frame. I'm going to show you something. So let me see here. I'm going to bring in another picture that proves that point. All right, let's go get it. So today, the market is open right now. So I'm going to bring in two charts side by side. Hopefully you guys can see that. So this is the S&P E-minis, the futures contract, and this is FEAR, the VXXB. It's a derivative of the VIX. You've heard FEAR. So this morning was unfolding fine, and then right here, somewhere in the middle of the morning, that's yesterday or Friday, and this is today. This is today. This is overnight action. So this is today right here. It was okay, a little bit red, and then off a cliff. So I was long the SPY, expiring today. So do I close it or do I not close it? If I'm seeing all these red ticks, and they look scary on a lower time frame, this is 5 minutes. Every candle is 5 minutes. So it looks like, oh my gosh, it's falling off a cliff. What do I do? What do I do? So the impression is to bail. But I didn't, because this was happening while this is falling, right? Because the S&P is falling, fear is rising, one big candle here, whatever happened there. Headline, no headline, I don't care. All I need to care about is it failing at 27. I wanted it, so I said, you know what? I'm not going to close it until I see what happens at 27. Why did I pick 27? Because that's where they failed last and last. Friday, they started there, fell apart, got to it, fell apart. Here they are, a big push towards it. I thought, what happens there will determine how I act on my SPY, long position. And so this was not a place to dump the longs yet. This was a place to decide whether you want to go long or not, depending on how the range trade is going to happen for today. So knowing the levels, and this is a 5-minute increment chart. This was a daily chart worth of 1 year. This is 1 day, 2 days. This is 1 year. Same concept applies. What happened prior to the relevant period of time? What happened last time we were here? Or what happened last time we were going to get to here? So knowing the levels will give me a little bit more comfort in managing my trades. This on a fast, this on a slower time frame. So if I'm long, if the stock opened this morning, I would say, I'm not going to go long it until I see it clear this and close above it. Or I'm not going to short it until I see it fail. So the bears would wait, and now so you know what, maybe it is a place to short. Maybe it is a double top, so there's a thesis. Somebody wants to short it, they have a thesis. Whereas if it's right there, you don't know. I need more clues. So levels are very important, because this candle would have looked scary on the way down. And maybe I can zoom into it and show you that, somebody trading, looking at the candle short term might make a mistake because of this. This is the same period of time today for the S&P. Fear. You can see, started okay, then red. Oh my gosh, okay, now we're stabilizing. No, wait, boom, boom, more red. And this was that exactly. So knowing 27 made me not get out here. Otherwise, emotions are at their highest right here, and you say, you know what, screw it, I'm out. So studying levels gives me a better, more comfort trading my open positions. All right, Nick signing out.